What's good, Jolene? Seems like you're in a different little area right now.
Yeah, I had to switch it up right quick because
We are live.
got to keep people on their toes.
Yo, Cisco was the first one in today.
Hey, Cisco.
Somebody does the video. Hey,
That's funny.
what's good, everybody? It's officially Thursday. We got one more day left in the market. Like, can you believe it? How far we've come along? Like, crazy, right?
Mm-hmm.
Oof.
I need to share. I always forget.
We'll let the people join in. How are each and every single one of you? We thank you for stopping with us. It's been quite the week. We've been doing a lot of filming. We posted some things. As like we came, we filmed, we saw, and now we proceed forth with caution. So notice and then there's a lot of surprises that may come about today. So this should be interesting. But let's get let's first get some housekeeping out of the way. If you are subscribed, thank you for being a wonderful cousin. Thank you for joining the family. If you haven't, if you're new, welcome. First of all, we want to just say welcome and go ahead and for sure hit that subscribe button down below. And if you're feeling generous, then go ahead and hit the like button because apparently it gets it out to other folks that may be just like you or other folks that you may know, and maybe some other folks that you don't like that may also need this wonderful information though. It'll get out to them, I guess, possibly if YouTube is that generous to us. And then on top of that, if you want to be in the know, go ahead and hit the notification bell to be a part of the notification squad. All right, that's a tongue tie. I guess I have to get better at that. So, Jolene, what's going on in these streets?
Yo, what is up? So, I do agree with you about this whole proceeding with caution bit, but the market was all green today, so that's good. We had the Dow up 35.20 points, S&P 500 was up 17.80 points, and the NASDAQ was up 159 points even. Then for our sector breakdown, okay, so we have real estate coming in at number one, consumer discretionary, and then communication services. And then for our bottom feeders, health, materials, and energy. Energy has been in the bottom for a minute, so that's what we're looking at for.
I'm gonna make a bet here. I'm gonna go ahead and put it on the docket for October 1st. So that way, when we think about it going into the election, I'm going to say that if the market gets shorted, right, during election time, I think that people will be putting their money towards energy. So watch the XLE ticker.
Okay.
Just want to put that out
there. XLE. Okay.
I don't know. I just have this hunch.
Oh, you have hunches now? Something else. Yeah, sip the water, sip the water. All right, so for our top picks, now, as you know, you can go to Instagram and look up that Come Up series, and you can see our top picks. Now, for these picks, we have Tesla coming in, number one, Twilio, and then Square. And then for the bottom feeders, we have XLY, NVIDIA, and XLI. Now look, before anybody says anything, first of all, NVIDIA is still in the green today. Okay, it may have been in the bottom, but it's still in the green. And that's all I want to say about that.
Okay.
That's all I want to say about that. Oh, let's talk about where the super chat dollars are going to.
Yes, let's do that. Let's get, like I said, we're all about housekeeping, so let's get that.
Yeah, let's get this done, and then we have a ton of news to cover. So, all right. Operation Reachback Incorporated. ORB's mission is to cultivate the minds of the next generation the next generation of young leaders through mentorship by emphasizing the 5 core principles: relationship, responsibility, respect, reach, and a return. ORB desires not only to have a lasting impression because impressions fade, they desire to have an impact that leads to character transformation and results in the empowerment of the next generation of leaders. You can find out more about Operation Reachback Incorporated at opreachback.org. That's opreachback.org.
All right, so I just dropped that in there for everybody. All right, so Jolene, so we got a lot of news, a lot of things. But first off, we want to, you know what, I would be remiss, and I think that this is definitely something that we must do. First off, I want to send a special shout out, not to Butter, who's in the back, but I definitely want to send a special shout out to Steve Arsenio.
Yes.
Producer, DP, like the guy who makes all the magic work. So for example, when you see Me and My Evil Twin, I mean, that's all Steve. So if you can go ahead and send him happy birthday shout outs, you can find him on Instagram at Directed by Steve on IG. So we definitely say from all of us at the Come Up series, thank you, Steve, for what you do, and happy birthday, brother.
Happy birthday, Steve. I got you a present. You're going to love it.
He's sitting right next to me, looking at me like.
Classic Steve.
the man behind the man from the shadows, I guess I should say.
And behind the camera.
Yeah, it's filming the whole thing. So, but we got to be careful though, because he actually has control over all the bloopers that could possibly just.
That's like Black Belt. My bloopers ain't coming out, y'all. Okay, Mark can show his bloopers, but y'all ain't gonna catch me slipping. No, I'm just kidding. I don't care. They are funny though.
They are. All right, let's get the business, because everybody, we want to know, like, how is it that we can help you? And within this, it's all about giving you an hour of value. So, Jolene, what's first on the docket?
Next on the docket is just kidding. Zoe.
Shout out to Zoe.
All right, let's ease it on in. Get your shady sips prepared, because I already know how you do. Let's talk about these antitrust hearings. Neville wanted to know, and it wasn't even a question; it was an exclamation point.
Oh, okay. So he said that with deference. Okay.
Yeah, he said that with his chest.
All right. So here's the thing. A lot of folks, when we think about antitrust, right, it's like we think about it by two key formats or factors. One, competition. And since we have a former, or still a person who understands the law because they went to law school, that's Jolene GC, not Mark Monroe, that can possibly fill in if she would like to. So when we look at antitrust and like monopoly, so we think about two things. We think about competition and then consumer, the two C's. Those are the only two things that really matter. So the first thing that everybody is starting to circle around the fire about is competition. Now, a lot of these companies have got significantly big. They have essentially knocked out some of their competition in certain ways competitively. Some of them may have been a little bit, makes you give them the side eye. Some of them are like, oh, no, player, you wrong. And then other ones, it's just like, it's kind of like this large gray area in which that it's kind of like, well, is this really anti-competitive, or is it just that you were just not good enough to really be able to compete against such a company? And have these companies gotten ridiculously big? So that's the first one. The second one is this really harming the consumer? And that's really, really hard. So the last time we think about a technology going through, anti-monopoly was Microsoft back in the day. And so when we look back in history, when we think about Microsoft, we think back to when, I guess, we had Windows, we had, and Office didn't really matter, but I mean, it was, another Microsoft piece of software. But the other piece that mattered was when they brought in internet browsers, such as Internet Explorer and also MSN. I think it was their MSN Internet Service Provider, which was all bundled into the Windows service, that kind of knocked out any competition from any of the other folks. Like they were going after the AOLs, the Netscapes, and that was it was the Netscape case that really made everything significantly like, all right, you guys have just like completely crossed the line here. The other part was, it was just that, okay, hey, if they're doing all this, is the actual consumer benefiting? And at the point in time, a lot of folks were feeling like, hey, Microsoft, you're doing a little bit of price gouging here, because we're already spending like ridiculous amounts of capital on this Windows software that you're giving us if we want to have access to it. And then there's this other part where now it's like you're charging us, and it's kind of like you're putting us in this bubble, because you have Internet Explorer, you had also Microsoft Windows, and then on top of that you had MSN, internet browser or internet service. So all those bundled together kind of like really knocked out any competition. So that would be like, for example, if Mac OS created Mac, the device. So they have the device, then they have the software, but that's all tied together because it's proprietary. And then on top of that, they would also have Safari, which is tied to the Mac OS software. And then on top of that, they came through with their own internet service provider to knock out any potential competition from really the big one in the room, which is Comcast. So that would be considered anti-competitive. And then on top of that, if they throw on price premiums on top of that, now it's like, okay, you're hurting the consumer. So let's kind of like roll it back a little bit, shall we? When we think about like the Facebooks, the Googles, and I forget who the other player is, somebody like them. But I think there's 3 companies, right? I think it's Facebook, Google.
It's Facebook, Google, and
I don't think that it's Amazon or Apple.
Let me look at that real quick.
Anyway, let's just start there, because those are really the main 2 targets, right? Because when we think about like speech, when we think about political beliefs and political speech, when we think about like, for example, censorship, those are the main 2 players that are really within the space. And on top of that, when you think about ad dollars also, those are the number 2 that reign supreme. Now, of course, Amazon's stepping into the space, and so is Apple, to possibly, take a little bit of their lunch and thunder. But I mean, make no mistake about it, it's definitely Facebook at number 1 at ad revenue. So when we look at it in anti-competitive, when we look at your Facebooks of the world, I mean, look at what Facebook did to Snapchat. Now, of course, part of some folks would also say, you can't really blame that 100% on Facebook, because had Snapchat not changed its main portion of its platform, they probably wouldn't have lost all those users, thanks to that Kylie Jenner, I think, tweet saying, is anybody still on Snapchat? Right. So, but we've seen it happen with Facebook and Twitter, where they've taken some pieces, and then we've seen it happen with Facebook and Snapchat, where they've taken some features, and now we're starting to see it with Facebook and TikTok as well, where they brought in Reels, which is a major portion to what TikTok provides. Now, the question that we now have to ask is, how much of this is actually hurting the consumer? Now, it's kind of hard to really judge that, because of the fact that it's free to use any of these services through Facebook. What you pay for is essentially giving up your data. Right. So, and then when we look at it, it's like, I think Victor said it best, and I kind of like, I guess we both kind of think a lot alike. Pretty much he said, like, how serious are we going to take any of these Capitol Hill, hearings, especially if, such a company that's so big understands and knows your search history, and also knows who you've been ghosting on social media and everything else. How hard are you really going to press somebody that knows your history?
I ain't saying nothing. I'm just kidding.
Yo, if this was me, depending on the type of activities that I may have partook in, I'm sitting quiet.
But just for the record, it was Amazon, Apple, Facebook, and Google. Those are the main ones. And breaking news, Merk.
What's that?
Breaking news, according to CNBC, we have House passes $2.2 trillion Democratic coronavirus stimulus bill.
Now we just need the Senate to pass.
Right. And this is less than what they originally were
but for anybody that wants to know how does this impact, watch the futures market.
Okay.
So now that this bill has been passed, I'd be a watcher of the futures market, and so far it's kind of sitting flat. So it's still trying to digest the information, probably read through. But I'd be a watcher of this to see exactly what happens in the Dow futures. I mean, technology is still going to be fine. But when we think about it, it's really those other industries, like, for example, within industrial travel. I mean, we've seen what happened with the airlines, where they were talking about furloughing and laying off a bunch of folks. So this could possibly switch things up. But that's why I say proceed with caution here, because a lot of things that are also that haven't been covered. Think about utility bills that haven't been covered. So, like for example, a lot of electric bills, gas bills, a lot of folks in whom much that can't pay that, especially since a lot of that excess money that came out of unemployment was no longer there. A lot of those bills racked up. A lot of folks who owed rent, those bills have racked up. So I'd be really cautious here in stepping into other spaces in which that, how strong are they?
I just want to make a point because someone put in the comments that this conversation is above them right now, and I just want to let you know, like, that's okay. You can get in the habit of just following the news on your CNBC app, or whatever news outlet you want, and just start reading. And by the time you add it into your, morning routine with your coffee or your tea or however you get down, you'll, as you're tuning in, like you'll start to recall and be like, oh yeah, that's what they were talking about when they said X, Y, and Z. So keep hope alive. Keep reading.
You'll be all right. You'll be all right. It's like sometimes it's like it takes a little bit of time. That's why we make sure that these videos are saved on YouTube, so that way you can always come back and watch it. And then on top of that, like she said, looking at CNBC, if you have an iPhone, use Apple News. And then just add the category financial markets, and then the sectors within your search category, within your research categories. They'll add it there so that way you can always have consistent news that really impacts that sector or that industry or financial markets. And that's a great place to start because you can use that as parallel. And then always go back. We'll keep doing deep dives so that way we can continuously give you more information. But for some folks that think that, like for example, to bring it back a little bit, when we talk about monopoly, I guess the best way to explain it is, imagine if you had a lemonade stand. We'll just keep it that simple. Imagine having a lemonade stand. But then all of a sudden, there was a bigger lemonade stand that came in out of nowhere, and they just literally just set up shop right next door to you. Now, you had a good thing going with your lemonade stand. Like everybody in the neighborhood was loving yours. But now they're able to produce more. And then on top of that, they're able to, say, for example, adjust the pricing so that way essentially it makes it competitive for the consumer. But yet at the same token, it's anti-competitive for you because of the fact that you lack the resources, you're smaller, and on top of that, you really can't compete because of the fact that if they're that big, imagine if they put, say for example, a lemonade stand on every single block that surrounds you. That is the definition of, say for example, being anti-competitive, because now they control the entire neighborhood. That's quite the operation that they have going on. I'm just saying that. But just think about it. If you're the competitor and you're that small, then there's nowhere for you to grow. And ultimately, most likely, you'll either be gobbled up by them or essentially you'll go out of business. So I guess that's the definition. Now, when I mention good for the consumer, if they, say for example, did well and then ultimately knocked you out, and then they started raising the prices, now they're on every block. So there's no way for competition to step in. And then on top of that, they can raise the prices. So now they've raised the price of every cup of lemonade. So now the consumers, the people who want to buy lemonade, it went from, let's say, 25 cents to $1. That's the definition of a monopoly. Hopefully that explains it best for you. So I don't want to ever feel like anybody's caught in the sauce or lost in it. I always want to make sure that you have the best information as possible.
Right. And one thing also that you can do, let's say you're not keeping up with what the conversation is. First of all, that's okay. Second of all, just start to listen for the particular companies and then just go back and click on, the news for that company, whatever app you're using for your news, and then just start reading the news about that company. And then pretty soon you'll start to catch on. So even if you don't follow the conversation now, you can always go back and review those companies that were mentioned within this conversation.
Yep.
All right. So moving on here. All right, let's talk about my side stock bay.
Yes, let's
So
talk about them.
side stock bay, NVIDIA.
Uh-huh.
So we have a question here. And let me see.
Is this about the acquisition?
Yeah, so they want to know, like, what basically what's going to happen if Nvidia is not able to acquire ARM.
Not a problem. So when we think about like acquisition, so for those that don't understand what acquisition means, it means when a company acquires. And so when you have a company that is acquired, that means that essentially that they're bought out for X amount of capital, and ultimately they now assume underneath a new ownership over most likely the company that just bought them. Sometimes in some cases you allow a company that still has acquired you to allow you to run as an independent. And this is where we currently are today. Like a lot of folks, you are like, I'm glad that you're coming into the space to understand what's happening within tech, because this is really, really huge. This is really, I would say that this is like, if I could really put it into perspective for everybody, this right here is going to be the moment which defines what technology does over a span of a generation. Now, I'm trying not to overhype it, but I'm just trying to let you know exactly the landscape of where we are. So let's roll back the clock a little bit, shall we? So we've had our industrial revolutions, we've had, our renaissances, and every period of time we have what is called the golden age period. Well, we're in that now, and that golden age period in which that we have now countries that are battling against each other, and really the main two countries that are the biggest dogs in the room are China and the United States. So it's letting you know that the stage that's set right now is all about technology and where is it that we are going from here. So for example, we're battling over things like AI, we're battling over things such as devices and communication. All these things matter because that's the revolution in which that we're in. If you notice, you're starting to see robots. You're starting to see robots. Like for example, there's an android that now became a citizen in Saudi Arabia. I mean, this female android has more rights than the women in Saudi Arabia actually do. Like,
Wow.
put that into perspective.
Mhm.
There's there's so many things in which that are happening around us when we talk about big data and how is it that we use that data and how it's literally starting to take shape, form, and fashion. I mean, look at Amazon getting into the drone space inside your home. The first part of its drone strategy, which is using the security cam company, which they acquired, Ring, and from there, it's now bringing in drone technology to literally be able to fly through your home. Think about 10 years ago, we would never even be talking about this. That's letting you know the leaps and bounds that we're taking within technology. So then let's bring it forward a little bit. Now we see chip companies that are really starting to take shape, form, and fashion. How do we know this? Look at every single major company out there that literally wants to build its own chips. You have Apple fabricating its own chip. You have Tesla doing the same thing. You have many other players that are already starting, that have already been doing it, like Samsung, they create their own chips. But we're starting to see like why, like when we think about devices getting faster, communication needing to be faster, we think about data needing to be faster, what we use with the data and how, like for example, you could walk into a store now and you never even have to touch a register. You could literally just walk in, pick up your groceries and just walk out, and the data already recognizes who you are, what is it that you picked up, and it already racks up the price and it just sends you a receipt and a bill. That's AI technology at its best. So when we think about like what powers AI, now we bring it into we bring it forward for you. The chips. Many of you know as CPUs or chips as the brain of a computer. Well, now what you're thinking about now is you're thinking about the brain of cloud infrastructure. You're thinking about it, the brain of your devices in which that every single one of you are currently using right now, the brain of even cars that are getting smarter, the brain of even cities that are getting smarter. When we think about all those things now, here's where the revolution comes smack dab in the center. China wants to be the leader. And for a certain degree, I think that they are leading when it comes to technology because their government allows it. Now, we just talked about regulation and anti-monopoly, so just let that sit in the forefront. Now let's bring it back into perspective for NVIDIA. So NVIDIA is looking to acquire a company that has been pretty much neutral throughout the entire chip space. So they supply a lot of chips and its fabrication and manufacturing to pretty much almost anybody who's the who's who within the chip space. That's what ARM does. Now you bring in NVIDIA, now it starts to say, does America have a clear advantage over other countries? And also, what will they do with that? Now, from what we've heard from NVIDIA is that they say that we're going to allow this company to literally just remain what they're doing right now and just remain neutral. If anything, what we'll probably do is add some innovation to it. But for the most part, we'll allow it to run separately. Now, there are companies that allow companies to do that. Like, for example, the best example that I can give you is look at Microsoft. Microsoft acquired LinkedIn, so they own LinkedIn. But yet at the same token, you don't see Microsoft's name plastered all over LinkedIn. LinkedIn is a company that still is able to run on its own. It's just that it's under the portfolio umbrella of Microsoft. And so NVIDIA is trying to make that same case.
Yeah.
Now, we've seen in other cases where T-Mobile has acquired Sprint, and Sprint is no longer Sprint. It's now T-Mobile. And so when we look at this deal, it's going to have to be not only approved by the United States, it's going to have to be approved by the UK, the European Union, as well as I think it's China and Japan. Now, there are some countries that are on board, but then there are other countries that are making a huge case, and hence the reason why we've been battling and duking it out against China throughout this entire period of time. Now it's starting to bring things into the forefront by saying, is America really lining itself for an unfair advantage? And you can make cases on both sides. And that's where we currently are. Now, this deal would not just immediately close. No acquisition deal immediately just closes unless it's just like the company is ridiculously small and it doesn't really have that much of a major impact. But when it has that big of a global impact, then yes, it's going to have to take some time. I don't see this deal closing for, say, for example, another, I'd say 12 months.
So when it does close, because just the possibility of that acquisition is pretty much baked in, like the hype about it, the excitement. Do you anticipate NVIDIA, like once it does close, let's say it closes, then, well, no, let's say it doesn't close.
If it doesn't close, then NVIDIA just continues to just go as it is, and then they collected $40 billion in cash and stock back. It's just removed out of escrow, and it's just like, okay, hey, back to business as usual. Technically, NVIDIA can spend that same money and ultimately just innovate over time, but then to acquire an ARM, it just means that you can get into the mobile space a lot faster.
Yeah. Okay, so just still on the chip tip, so to speak, we had a question come in, and this was about the new options that became available for Hero.
Okay.
Mainly, they wanted to know, one, does it mean anything if there's zero volume, zero interest, and the only strike price available is $30 for May 2021 with a volume of 4 and 46 interest? They wanted to know what do all those numbers mean? What is that?
It means that the contracts have just hit the market. So essentially what's telling you is that if you want to be one of the first people to jump in, then fine. As long as the stock keeps doing its thing, and I think that the gaming industry is going to do significantly well going into 2021 and 2022, their future looks very bright. I like Hero. It's actually I picked it on our picks for a significant reason, not only just for COVID, but also I think that when you look at the gaming space, it's becoming just as popular as the standard sports space, which it now has to be recognized as a legitimate competition platform. When I look at the expirations being made available, great. Whenever you see contracts or expirations made available, all contracts or all options change start off at 0 when they first hit the market. And then the volume just tells you who's recently bought or who's been buying. And then the open interest just tells you exactly who's willing to buy at. Now, for those that understand this, you remember the XOK 130 calls when they first hit the market for the January 2023. There was pretty much practically no volume in any of those positions. Now, it's not to say, and I think it was 0-0 for open interest and volume, but the more people started to jump into those positions, myself included, guilty, then ultimately it's like you started to see things start to stack up. And I think that the future is bright for Hero. So if you see an opportunity, go ahead and take it.
All right. So we have a quote here from a Yahoo Finance article. In quotes, Tesla will have 0 sales in China by 2030. And they also want to know.
0 sales in China.
That's what it said.
By when?
2030.
Okay. Who wrote this article?
This is from Yahoo Finance, according to I can't tell, 98 Dirt Bike. I don't know who that is, but
okay.
now I know what this name is.
To say that Tesla is going to have 0 sales in 2030, so you're saying 10 years from now, a company that is literally probably, I would like to say, at least between half a decade to almost a decade ahead of the entire industry sector. And on top of that, they keep pushing forward the sector and the industry, whereas everybody else in the industry hasn't been able to catch up yet. You're saying that they're not going to be able to sell a vehicle, and on top of that, they're building a second factory in China? Like, that doesn't make any sense. That doesn't make any sense, none whatsoever. But, you know.
I'm just here representing the cousins, you know, I'm getting their questions.
I know. Here's the thing. I like, and for those that saw the bull versus bear case, it's like, you know, I like data to be provided that actually can be verified or backed up. But for somebody to say that a company is just going to automatically just have no sales in 10 years, that's a very, very bold claim. And it's going to draw a lot of attention. Now, the question that we have to ask ourselves is, why is this drawing up attention? Could it just be that the same time that they said that they would have 0 sales in China is at the same time that we should be seeing record-breaking sales possibly tomorrow, or record-breaking deliveries tomorrow from Tesla? You make the call.
Well, so there was some unfinished business. Yeah, there's some unfinished business. On one of the lives, on the IG live, someone was asking you about who your Taylor and who your Wags were based off of the show Billions. Are you prepared to, you know, share?
Yes. Today I get to reveal who my Taylor and Wags is. So for those that didn't see me ever discuss who my Taylor is, so Taylor represents Taylor Mason at Axe Capital for anybody that watches Billions on Showtime. This is not a plug or anything like that, but it's a great show. So I guess shameless plug, but I mean, good show. I guarantee you, now that we've been having these lives and the content through the Come Up series, I guarantee that the show won't be over your head. It will actually be something in which that everybody will be able to digest and understand, and which is dope. So Taylor represents like this strong data focus character that is very good and is almost just as good as, I mean, Bobby Axelrod himself. So when I think about Taylor, I think about quantitative, and I think about things in which that are innovative, because Taylor is innovative and sees where nobody else sees. So for those that didn't know, Taylor is NVIDIA.
Interesting.
Very, very interesting, because of the things in which that NVIDIA is doing on the data center side. And it's like we're only seeing just the beginning there. What we're seeing in autonomy and that's also still within its infancy, but they have a ton of data that they can go through and kind of like create something even better and keep building on top of that. When we think about the gaming space, it's not showing that it's not showing that it's slowing down. When we look at what they could potentially be doing in also other chip spaces, like for example, actual CPU chips, and many other things, the future is very, very bright for NVIDIA. So that's the reason why Taylor is my pick.
Now, Mark, you know that NVIDIA is my side stock bay. And what's interesting is that the way NVIDIA has been performing lately, it seems like they're trying to come for SMH's spot on my, on my list. And I'm just like, whoa, calm down, NVIDIA.
Go in.
I don't think I'm prepared to like make any switches that, you know how I feel about SMH, but I mean, NVIDIA, they looking away. Okay.
So then there's Wags.
Yes.
And Wags represents the COO, the right-hand man of Bobby Axelrod. And so I guess the show is like, no matter what, ride or die, but at the same token, people can be outspoken, but at the same token, smart as a whip and also knows things just as much as sometimes Bobby, but you know, sometimes can just be a little bit on the outside of the spectrum. Mm-hmm. And so when I choose that company is
who?
Tesla.
Hold up. Hold up.
Where did she go? I think we just lost her. I think I just made her mad.
What? You know that's why Stock crashed. You know it.
Wait. Hold on. Your what? Your stock crush?
Yes.
Wait, but you just revealed that to everybody.
I don't care. I cannot believe
you. Well, I mean, believe it. I mean,
let me just. Where's my chair? Let me just get comfortable.
So we also had a surprise for each and every single one of you. Jolynn is actually here at the Batcave today. So she's joining us. So now we get to just, you know, we're here. Nice of you to join me.
Hello there.
All right. So yeah, Tesla is that company for me. And the reason why Tesla is that company for me is because of just simply when I look at the future, and well, actually, I'm not going to reveal certain things because if you haven't seen the Bull versus Bear video, I also left some hidden gems in there for you. So if you were watching the video and if you were just looking at it just for the shade and the back and forth, which, you know, I mean, hopefully I did well. And hopefully my twin, you know, I'm coming for you. I'm coming for you.
Wait, which one are you today? You're bullish, right now? Or I don't even know who I'm talking to right now.
Life is like a box of chocolates. I did hide something within that video. So if you can check, go back and check. I'd say around mid-video, you may possibly see some things as it pertains to why is it that it's my Wags. So, I mean, there you have it.
It makes sense. I mean, the clues were all there. They were there. Me, you know, I wasn't even prepared to go public yet with Stock Crush.
I was going to say, like, what happened there?
I wasn't prepared, but then, you know, I just hear you. You know, I was busy taking notes, like looking at what the cousins were saying. And then I heard you say Tesla, and I was like, hold up now.
But, you know, they still don't know who my Bobby Axelrod is, though.
Okay, I think you should say that.
No. We're not going to. That's we got some time for that one. Okay. That, you know, we still got some learning to do for that one. And okay. They still don't know who my Bobby Axelrod is. They still don't know who my Black Panther is, who the Dark Knight is. And, you know, there's quite a few other characters, including John Wick. So
is John Wick coming out on Sunday? I'm just kidding. Don't mind me, y'all. Don't mind me. I'm just cutting up.
So yeah, I see somebody in the comments saying Bulls, let's go. And we're not talking about the Chicago Bulls, no shade, but we're not talking about that. All right, so what's next? I mean,
there was something else. So someone wanted to know about Tesla's Walmart order for trucks.
I mean, what more do you want to know? I mean, that's the second retailer that's now also technically partnered with Tesla. And Walmart has always been partnered technically with Tesla. Like, I think on top of Walmart, they actually have solar, which is provided, well, originally it came through Solar City, but when Tesla acquired Solar City, essentially now that's Walmart and Tesla working together. So, I mean, there you have it. And then on top of that, we hear rumblings about Target connecting with Tesla as well. So, I mean, it makes sense, especially since you have a lot of states going zero emissions. Mm-hmm. it's kind of interesting because you see a lot of folks that are trying to get into the trucking space, which is, I mean, great. But I would say if you're looking to get into the trucking space, you definitely need to give a hard look at electric semis, because that's going to be really the future. I think it's going to be actually illegal for internal combustion engine trucks or semis, however you want to define it. It's going to be illegal for them to actually drive through certain states. So, and I think that that's going to be something that's going to be adopted throughout the United States. I think it's going to be federal. So,
all right, well, let's get a little messy, shall we? Can we get a little messy? Can we get a couple of shady sips in?
I mean, you know, let's
Are
do
you
it.
here for it?
I'm here for it.
Question from Rob. Rob wants to know, why are people buying Nikola?
Oh, so we were good. We were going that far. We did an episode called "Leave Hope's Ass at the Door." Excuse my language, but we.
Dang, was it that the term?
I think it was like "Leave Hope at the Door."
Right.
And I think that you have a lot of folks that are literally jumping into this company based upon pretty much day trading it. I think it's one of the heaviest day traded stocks out there. Pretty soon it's going to be. I think there's some folks out there that are still waiting for that moment where it's like the emperor has no clothes moment. And it's like that grandiose reveal to let people know that there was really nothing underneath their sleeve. So I say this, for those out there that are interested in possibly shorting the stock.
Shady sips for the one time. If y'all don't already know, you will stay hydrated messing with the come up series. You will be hydrated.
Hey,
okay?
it's good for your skin. All right, so yeah, so I think there's a lot of folks hoping that that this stock can run. I feel bad for a lot of the people who bought in around like the high side, because I don't know if it's going to reach that level. But I think that what we're seeing is, you know, we're pretty much seeing Nikola close to the death cross. I think that when you see companies like GM, when they step away and when this deal starts to get a little bit too messy for them, yeah, that's at that point, that's the end. Because if you have a company like GM, I mean, or Bosch, I think they make a lot of products, like, for example, auto parts, or they manufacture a lot of auto parts. Let one of those two drop out. It's over. It's over.
Okay, so carrying on with shady sips. This is our messy portion of the live.
Ooh, I like these sections. We need to start doing these more often.
Yeah, get your water ready. What impact does the presidential debate have on the market? Oh, he had to switch it up, y'all.
I didn't watch it because we were doing an episode of the Come Up. If you were watching us on Trade Talk Tuesday, you can clearly see that we missed it.
Shade point one.
But I will see the other part is, it kind of like when you watch the replays, it kind of felt like watching the movie, what was it? Grumpy Old Men. It was just like, why? I mean, for me, I will say this, for me as an investor / trader, and I probably may catch a lot of heat behind this. The technology play will possibly take a dip if we find out that Elizabeth Warren takes a significant seat within Joe Biden's cabinet. You will definitely see some strong pullbacks there. Probably within the algorithmic trading, but for the most part, it's like, yeah, that's a red flag there. If you see that, I mean, honestly, if Donald Trump wins the presidency, which, you know, I guess I don't really talk about my political views or anything like that. I just try to talk about it how Wall Street sees it and how the money sees it. But I mean, I'm not voting for Donald Trump. But if he does win, I think that you're still going to see a lot of businesses do their thing. Now, the question is how does that impact U.S.-China? Because China is kind of like banking on the fact that he does not win. Hence the reason why we only got to phase 1 of the deal. So now if he wins, then that kind of like forces China to come back to the table and try to, you know, do some type of deal, which means that they lose a little bit of potential leverage there, or they just say, okay, hey, we'll just wait it out again for another 4 years. I will say this: the U.S. and China, the U.S. economy. I can speak on behalf of the U.S. economy. The U.S. economy cannot afford another 4 years of going back and forth with China. It just can't.
I agree, because it was pretty much a doozy. And I'll say, as a Black woman, watching, you know, just the white male mediocrity just duke it out on national TV, having our whole country just look a hot mess, I just wasn't there for it.
Clearly, I didn't see it. So until, like, you know, I just saw some of
I saw some Twitter highlights.
There it is. I just saw Twitter highlights, and then that was it. I was there for the comments. I was there for the memes, and then on top of that, just seeing exactly if anything was said. When I found out that there was nothing said, I was just like, okay, well, yeah, whatever.
Bickering. All right, up next on the docket. I'm just kidding. Let me stop doing that.
Yeah, next thing you know, you're gonna get an Instagram message, right?
Right. Let me see. Datadog and Microsoft partnership.
Yes,
pretty interesting.
That is actually a good match. I mean, for anybody that if you saw it back when I actually posted, shout out to my friend Eugen, who also kind of like put it on my radar when he was just talking about it through a Reddit posting. And then I just started giving it some thought. And then I started doing my own technical analysis behind it. Mm-hmm. And then that's when I started seeing, this actually has some significant legs. And I see that there's a huge upside for the cloud space as well as cloud security. So, I mean, kudos to Datadog. My price point, if anybody wants to go back and check it, when I started talking about Datadog, I think I had $100 price target for Datadog. And as of now, that was back when they were like maybe $50-$60 a share, or maybe even less than that. And then I said it's going to 100. I think it was around 50 or 60. And I said that this is going to 100 easily. Well, if you listened and if you did that trade for, say, for example, the March, I think when I also called it.
Anyway, sore subject, but, you know, I'm glad for those of you who did get in on Datadog. I just couldn't do it at the time. I just couldn't. Not that I didn't believe in Datadog. I just couldn't do it at the time. But Datadog now, just for the record, is at 103.51. So if you got in, good for you. No, I'm just kidding. No.
Wow, that's crazy.
Congrats. Oh, yeah, I just saw that.
Hope Hicks just tested positive for the coronavirus.
And
she was traveling with the president. Let's just move on.
Yeah, let's move on.
I guess we've had 2 breaking news. I guess.
Right. It's hot take Thursday, yo. It's hot. It's hot.
These streets is hot right now.
All right. Okay, so let me see. Okay, we're moving out of the messy portion now, back to, you know, clean news, I guess you could say. Let me see. A lot of y'all wanted the same, some of the same thing. Oh, let's talk about IPOs.
Okay, let's talk about it.
Let's talk about.
Oh, Palantir.
Yes.
How did I know that this was going to come up? Yeah. Now, for those of you, I actually gave a lot of you homework on doing your research on a Palantir. Now, I did talk about it. I said, there are some data issues in which that some folks, you know, may want to go back and relook at. And I mean, I did say that.
You did.
And they popped. I think they popped like 50%. They popped like 50% on their IPO day. And we waited. And we're still waiting. And here's I guess I think I need to speak on behalf of like this whole IPO market thing, because I think it's time that I think it's time for some truth telling.
It's always time for truth telling.
But I think it's really time for like some serious truth telling.
All right.
You think so? I mean, should I?
Yeah.
Okay. All right. So we're going to talk about the tale of 2 IPOs. We're going to talk about IPOs, and then we're going to also talk about SPACs. Now, recently today, if anybody was watching CNBC and it just happened to come across my timeline about HIMS filing for a SPAC to go public on the publicly traded market. Now, here's the thing. I don't trust a lot of the SPACs. Now, of course, a lot of you were like, well, Mark Chamath also has a SPAC. I mean, good for him. Congratulations. But for me, I look at it like this. As an investor from the private side and then also an investor on the publicly traded market side, here's how I see it. You don't have cash. You have an idea that essentially is possibly gaining some traction. but it still hasn't been market validated yet, and you need it to raise capital. Now, for anybody that needs to understand what's happening in the venture capital community, a lot of those companies, you're not seeing a significant portion of companies like we typically do get funded this year. What you probably see is a lot of companies applying for emergency funding within VCs or angels, or going back to their original investors, and also going to banks to raise what we call debt rounds. Now, for those that need a refresher of what we call rounds of funding, so when you start off as a private company, you typically go from seed, and then that's like your friends and family. And then after that round, you go to the actual institutional rounds, which we know as Series A, Series B, Series C, Series D. Now, I stop at Series D because those are really where it starts to stop being about equity. And by this time, you've already raised more than enough capital and cash, and ultimately your company should be at the point of scale or growth. And so typically around this time, we also see the fact that also you're starting to raise debt rounds, which means that you're buffering, you're adding more cash and also trying to take more, say, for example, capital in, but also decrease, say, for example, your debt line, with the promissory note of understanding that you're going to go IPO one day. So typically when you get to this stage, you're either looking at two things that are your exits. Either one, a successful major acquisition at some ridiculous valuation, meaning market cap in publicly traded world, but in the private side, it's just valuation. Then you're also looking at possibly going public. Now, since a lot of VCs and angels aren't throwing as much capital and cash towards a lot of startups this year, you can literally just go check, the funding versus 2019 and 2020, which you'll see a stark difference. A lot of them are figuring out that, okay, hey, well, since I can't get it in the private markets, I'm going to run to the publicly traded markets. Now, here's one thing that people are not telling you about SPACs. There's a two-year timeline for this company to start being able to produce some form of profit. Now, if it doesn't, then essentially it has to return back what it's gathered from other investors. That's a major thing that people need to pay attention to. So, for example, the reason why people focus their attention so heavily on the Nikola is because of the fact that people believe that it's a business plan that is something that people had invested into, and they haven't seen anything there. When you think about IPO companies, let's take an Airbnb to compare. Airbnb before COVID-19 was highly successful, very successful. Like literally in the sense where they were challenging hotels. Now, the problem is that when COVID-19 came around, it wasn't exempt from the hospitality side. So which means that you saw Airbnb like also taking some hits. Now, luckily it had raised cash right before COVID-19 happened. But after a while, when people are not, say, for example, going to those Airbnbs, you're running out of cash. So which means that you're running into your cash reserve. When you start running into your cash reserve, now you got to start, say, for example, thinking about what are the other ways that you can raise capital. Either you go back to the private markets, but they've already raised so much cash. For anybody that wants to follow along with this, there's a website called crunchbase.com. In crunchbase.com, you can see exactly how many rounds a company has had, and then also how many times they got funded and how much they were funded. So with Airbnb, they're deciding to go IPO because they say, okay, hey, we've already scaled. We're already an established business. So now we're just going to try our hand at the publicly traded markets to raise cash. Now, that's dope because they've been established and everything else. With SPAC companies, it's not always like that. Now, there's even a darker area where like normally when you go IPO, it's like you normally do a roadshow where you're like trying to appease all these other investors to get them on board and whatnot. Now, there is a confidential IPO where it's like you don't want to release any of this data until the day that you're actually public, or as you get closer to being public, where you have to do a disclosure. All publicly traded companies have to go through disclosure just to be SEC compliant. So, but you can hold off in your timing pretty much close to the moment that you say, okay, hey, we're about to be directly listed onto the publicly traded market, whether the New York Stock Exchange or the NASDAQ. So what you're seeing now is so let's bring it back for you. You see companies that are public that are literally just going the standard route of going through the roadshow and going through the necessary pomp and circumstance with investment bankers and whoever not to be their underwriters. Pretty much means that they prop them up with cash until they go public, and then they make their money back on the backside. Then you have SPAC companies that are pretty much, guess, a business plan that would normally be presented to VCs or angels, and yet they're raising larger portions of capital. And then it's just pretty much they have to just show signs of life within 2 years, or depending on what the agreements are there. Then you have the confidential, where they don't have to release anything until they come public, and then once they go public, then the information releases. Now, here's the thing about Palantir's IPO. On the day that they went IPO, there were so many people, there were so many insiders that were trying to sell, and they were stuck. They couldn't sell. Like, the system was like literally locking up where they couldn't sell. So technically, had that actually taken place, we wouldn't have probably seen Palantir at a 50% gain for the day. If you notice, they started at a certain IPO, they started at a certain price within their IPO, and they didn't they didn't come close to that today. I think they came under their IPO, which lets you know that there were short sellers that were looking to short sell the stock, or people that were just looking to trade the stock, get the pop from the IPO, buy significant portions of shares on the IPO day, have the pop, and then ultimately after the pop, they just pretty much sell off.
Pop and drop.
So, for example, for everybody that was thinking about, okay, hey, let me drop into this company, or let me join in on this one, then essentially now you got left holding the bag with the stock. And honestly, in my opinion, for a company that's going publicly traded, and yet they're only worth, like, they only brought in $1 billion worth of revenue, but their market cap or their valuation is at 22 billion, you make the call.
All right, so in our last few moments here, let's talk about this notion of proceeding with caution, but then also let's touch on consumer discretionary for this upcoming quarter, holiday season, all that. A lot of people want to know what's up with XLY. And then also, you know how XLI was just added to our list. Someone was pointing out that XLI, has a 2-year negative performance. And so there's some question about, like, well, how do you even calculate the strike price? And, how do we look at this going forward? So those two, going forward, and then proceed with caution.
When it comes with the strike price, I think I've mentioned how is this you can calculate it. You can also use the negative data and then ultimately say, okay, hey, that this could be a gain back for the stock. I mean, that one actually makes the road a lot easier for you when you look at it over the 2-year performance. A vast portion of XLI even dipping was because of the whole Boeing fiasco. And then thanks to COVID-19, and that just completely amplified everything. So that's a huge challenge there. But when we look at it, we ask ourselves as investors, and you probably have heard it before if you watch CNBC or many of the other analysts out there, they're asking themselves now, this is ridiculously cheap. Is all the bad news for Boeing and many of the other industrial sectors or companies within the sector, is all that bad news now baked into the actual stocks and the actual ETF for the sector? Now, if you agree, in my belief, I believe that a lot of the bad news is already priced in. And so we don't have to think about airline companies like your Deltas, your Southwest. We just have to look at the folks who build them, like your Boeings and those companies, your Raytheons, your Lockheed Martins, your Caterpillars. You have to ask yourself, is there a climb back from here? And if you do see that there's a climb back, then now we have to ask ourselves as it pertains to price, where can we go from here? And to be honest with you, we don't technically know yet. We just see that there's a huge opportunity here, in the sense that if people start getting a little bit tired of being within tech, now there's an alternative. And technically, when we look at the S&P 500, technology only represents 22% of the entire S&P 500. You also have to look at who are the other players that have major positions or major percentages within the S&P. And if you're looking at where the S&P 500 can grow from here, it's not just tech did a great job, but then at the same token, it was the same reason why we have a lot of folks creating the argument that says that back in August, where we were saying that tech was completely overvalued and it had ran completely too hot. So in order for that narrative to be true, or in order for that narrative to no longer be true, then that means that other folks are going to have to be buying other places. I'm not buying financials, though that if interest rates climb, then ultimately that's advantage banks. Congratulations. But even then, I still don't think that financials are a great play. If I'm looking at consumer discretionary, I definitely believe that that's a huge play, because when I look at One, if you're an XLY, everybody knows what the big dog is in the consumer discretionary ETF, and that's Amazon. And let's make no mistake about it. The road through the holidays runs through Amazon.com. The road through the cloud runs through Amazon. I mean, of course, it's a nice little race between Amazon and Microsoft, and Google is like, hey, don't forget about me, and so too Oracle. But when we think about it, make no mistake about it, Amazon is literally going to dominate within the space of e-commerce. And that's just through the holiday season. We're not even taking into consideration what it's just going to do within this month. And so when we think about it in perspective, we also have to look at the other companies. Like, for example, has Starbucks announced its pumpkin spice latte yet?
No, but I mean, that's like a given.
Inquiring minds would definitely like to know, because when you see that announcement, also watch the stock. When you look at Best Buy and how is it that they've been still doing significantly well, they're also consumer discretionary. When we look at the Home Depots now and the Lowe's, that can say that they probably have run their course for the year. And it's not to say that there's no upside for them, but not as much upside, because as it gets colder, then that means that it's now more so retail spending and consumer spending for the holiday season. And again, the road runs through Amazon. I think there's also possibly Target. I think that McDonald's is starting to get better as we start to see some states reopen. But again, proceed with caution, because of the fact that if we hit second wave of COVID-19, that can have grave effects on your Starbucks companies, as well as your McDonald's and any other company. Like, for example, Booking.com is also within the XOY consumer discretionary. So there's some major hitters there. But then also at the same token, for those that like Chipotle, you also have Chipotle that's also in the consumer discretionary sector as well. So it's a delicate balance. And typically what we see during the second half of the year, typically you see XLY, the consumer discretionary, outperform technology. And that's just because of the fact that people have to spend their money and they're going to go places. When we think about it in the long term, though, technology will ultimately lead in the race between consumer discretionary and industrials. So, I mean, that's why I say proceed with caution when we think about it in this entire landscape. Also, take into consideration, we're just fresh off of a correction. So we are super fresh. So we've gone through retest and we've started to see that the test has passed to let us know that there is upside. We're starting now to start to test certain resistance levels. And when we mean by resistance levels, I guess I can show a chart. Should I show a chart?
In our final moments? Sure, go for it.
Okay, so just for the sake of it, I'm going to show a chart today. But I'm going to do something different, because clearly since, your Yahoo was hating, we're gonna leave them off. We're gonna leave them in timeout for a while. So let's go ahead and share a screen, and hopefully everybody can see this. We're gonna look at, for the sake of it, we're gonna look at XLY. So looking at XLY, where clearly for the day it ended in a positive area, but let's look at the full chart. Let's look at the full story, shall we? And we're gonna get rid of these, and we're gonna look at we don't need more chart options right now. So when we look at it right now, we're coming up close to testing that 150 level here at the 150.92. How do we know this? Let's go to the bar chart opinion, where it tells us that we tested the first resistance point around the 150. And then the second point of resistance is at the 150. Now, of course, we blow past this, then it's going to establish new resistance levels. But in the grand scheme of things, I mean, the future looks very, very bright for, okay, so you want me to log in. Let's just, whatever. Whatever. All right, so when we look at it in trajectory, yeah, we've got some, we're at the 148 right now, so that's exactly where we should be. Now, when we put it into the 9 months chart, yeah, we're coming up close to some high side, but essentially, given that where we were today, I think that this is going to readjust, and the Bollinger Bands will ultimately adjust themselves as well. but the real high is getting to this 154, and I don't see that happening anytime soon. I think that we're going to be probably testing the levels of the 140 between 148 and 149, 150. And that's where XLY is going to have to prove itself. Same rules apply when we look at your technology sector. So when we look at the technology sector, we're challenging those same levels. Now we're kind of like in a little bit of no man's level here because we just crossed past this area, we pulled back. So essentially now this is kind of like make or break time for XLK. Now the beautiful thing is, notice what you had mentioned earlier in the episode. Technology wasn't the top three, it wasn't in the top three performers today, but at the same token it was up by 1%. Let that sink in.
Yeah.
So
although I like when I see this.
Yeah.
You know, I'm saying this, I don't even know if you guys can tell what I'm looking at, but just the end part where it crosses over that midline and then it's up. So
yeah. I think that, like I said, again, the future looks very, very bright. I think that also with stimulus discussions, you know, being had and ultimately the House passing the 2.2 trillion, now the Democrats are saying, okay, hey, Republicans, the fate of the United States economy is now essentially in your hands based upon your vote. What are you going to do about it?
What's good, Congress?
So here we are, we're at the precipice, and hence the reason why I say proceed with caution in the short term, just in the short term. Long-term fundamentals will ultimately win out. But for now, yeah.
All right. Well, that's it. We got y'all. We have like a full agenda today, so it's like I'm trying to keep it concise. We will do the after party, right?
Yeah, this is gonna be interesting though because like,
okay, we'll have to figure out the dynamics of that. But you know me, I'm gonna be in there doing my thing in the comments, keeping it lit.
Okay. So I will say this to end it off. For those of you that are interested in doing positions, proceed with caution. You will see a little bit of volatility creep in. You may see some bullish activity come about, but typically when we hear about stimulus deals that take place, you typically see the market typically goes negative when we hear about stimulus, because now that we have stimulus, that also impacts the dollar. So $2.2 trillion, that's nothing to
sneeze at.
Yeah. So watch the dollar, watch treasuries. That can be also a very telling sign. If you're not watching any of those things, just know this: there may be some short-term pain ahead where the market could potentially have a slight little sell-off. Nothing too major, and plus we're going into a Friday, so that's even better. Thank goodness. So for those of you that are also looking into dollar cost averaging or buying opportunities, you may be presented with one, even if it's short-lived, because as we've seen this market go negative or start off negative in the futures market and then ultimately open and just literally go for a significant run. You may see a lot of bullish activity, especially if people understand that this deal is actually going to bear forth fruit, especially if people are collecting an extra $600 a month or an extra $600, I guess, in their unemployment, which they can deploy. Another thing for folks to proceed with caution on is also look at the fact that a lot of folks aren't traveling. So they're still making salaries or they're still making money. And so when you think about this market, you have to ask yourselves, if you were making your typical, let's say, annual salary, and yet a lot of those expenses have significantly cut back, where would you be putting your money?
70-30.
Just don't be the last one at the party.
And on that note, it's time to shut this party down and
go to the after party. So I will see you guys in lounge sessions. I mean, I don't know if Jolene will pop up or not, but you never know. And again, thank you for each and every single one of you that are rocking with us. If you like what you saw in this video, go ahead and hit the like button. And also please subscribe if you're not already subscribed, because we got some content coming. I mean, okay, I'll just leave that alone. And then on top of that, we also, if you want to be in the know, just hit the notification bell. We would love to, have you along the ride with us when we do our premieres of videos. I mean, the chats stay lit no matter what, if we're live or if we're premiering pre-recorded content.
Always.
So stay tuned, more coming. But until next time, I'm Mark Monroe.
And I'm Jolene GC in the place to be.
And this was Hot Take Thursday. See you guys next week. But for those of you that want to continue to join us, you'll see us in the sessions called Lounge. Talk to you guys later. Peace.